Welcome back to another earnings update. Today we are discussing Realty Income. The monthly dividend paying company released its earnings for Q4, which ended on December 31st, 2022, ahead of the earnings call tomorrow, and we are going to do a quick review and see how the company did this last quarter. If you are new here, my name is John, and this is Talk Finance, where we talk all things finance, investments, and a lot about stocks. I will be providing you with a quick update, so please remember to give the video a like if you found the video informative. And hey, you might as well subscribe while you're at it. As a thank you, I will just get right to the numbers. So the net income to common stockholders reported was $227 million or 36 cents a share, while in Q4 of 2021, the net income per share came in at 1 cent per share. Keep in mind that in November of 2021, Realty Income and VE REIT completed their merger, which also created their spin-off company Orion. Normalized FFO, or funds from operation, increased 18% to $1.05 per share compared to the fourth quarter of 2021. Their AFFO, or adjusted funds from operation, also increased by 6.4% to $1 per share compared to 2021. AFFO is a better measure than FFO since it considers the maintenance cost of the real estate property over its life. The value of AFFO is obtained by making adjustments to the FFO figure to deduct recurring expenditures required to keep the real estate property running and generating revenue. They completed a previously announced acquisition of the land and real estate assets of Encore Boston Harbor Resort and Casino from Wynn Resorts Limited for $1.7 billion. This was a large purchase from Realty Income. The transaction was $1.7 billion in cash, representing a cash cap rate of 5.9%. A cap rate is an assessment of the yield of a property over 1 year. To put it simply, it's what your return will be in a year by purchasing that property. Here's the best part. Wynn Resorts will continue to operate the Encore Boston Harbor Resort at their 5-star standard as the company's known for, but Realty Income will now own the property with a triple net lease arrangement with Wynn. It's a win-win, pun intended. I do want to mention that the expectation for revenue was $840 million before this next part. When we look at their financial result breakdown, we can see that their total revenue came in at $888 million. This is a beat of $48 million. Realty Income invested $3.9 billion in 578 properties and properties under development or expansion, of which $387 million was invested in Europe, including their first investment in Italy for 7 properties totaling $166 million. They announced the acquisition of up to 185 single-tenant retail and industrial properties from CIM Real Estate Finance Trust, which I already covered in the last video, for approximately $894 million, which is expected to close during the first half of 2023. Net debt to annualized pro forma adjusted EBITDA was 5.3 times. They raised $2.2 billion for the sale of common stock, primarily through their at-the-market program, with a weighted average price of $65.71 a share. Keep in mind that how REITs raise funds to purchase more properties is by issuing more common or preferred stock, since they have to pay out 90% of their taxable profits. They could also issue notes. So the raising of $2.2 billion from the sale of common stock is a regular occurrence with Realty Income. They also issued $750 million of senior unsecured notes due October 2023, realizing an effective semi-annual yield to maturity of approximately 3.93%. So Realty Income had a great fourth quarter, and we are seeing this big REIT get even bigger. You can see Realty Income continue its growth into 2023. They have their call at 2:30 p.m. Eastern or 11:30 a.m. Pacific, and I will try live streaming it like I did for Stag Industrial, and hopefully the volume in the live feed works this time. Let me know your thoughts on Realty Income. Did they meet your expectations? They beat analyst expectations, but barely. They have shown even in this high interest rate market that they are able to expand, so that is a great sign if we are able to lower loan interest rates by 2024. I would like to also ask you to comment on what videos you would like to see on this channel, what you enjoy, and what you would like to see more of. If you enjoyed this video, remember to hit the like button and subscribe for more. See you on the next one.